Okay, hello. This is Jack. And today is 2017 January 10th. Let's make this webinar and talk about some market. Okay, so first thing is the DXY. Okay, the DXY has dropped after the FOMC meeting. All right, actually after the increase in rate, it actually drops and break this 102 level. Okay, and test the previous this structure. All right, forms a minor support here, which we can see that now the key support is a 101.30. Right, look at the 4-hour chart. What do we have? Okay, we need to clearly to make these two levels very important. Okay, the first one is 103.65, which we can see that this is a recent high, right? Agree? So we agree that this is a recent high for the DXY for the dollar. Yeah, please type if you agree. Yeah, just tell me. Maybe there are some legacy. Yeah, okay, I can see that. And this is a recent low, right? This is a recent low. Okay. Is any lower place? Yes, we have. Okay, the DX1 101.75. That is another low, and here 100 level. So it's very important support for the DXY. Okay, but the recent low and the recent high, we can already see that. Okay, and look at the price action. What do we have? We can see the price, okay, swing from the high to the low, find some support, and it bounce back. Bounce back to where? To this structure, to this structure, right? Because this one previously acted as a support. Okay, support goes up. First touch supported, okay, didn't really break through, have some bias here, right? Second touch, okay, third touch, it actually breaks down. And retested, okay, retested, and goes down again. And then the price just pulls back to the same level, which tells you that this is a minor resistance right now. We can treat this as a neckline, right? Because a neckline means that there is a head. Okay, so this is a head, the first top, okay? So the head, and this is a neckline. Break the neckline, pulls back, you can short, pulls back again. Okay, see the price action, you can short again. However, the second short, look at here. Where does the price goes into? It goes into this structure, right? Because look into the structure. Okay, I know that some of you guys are new to the structure trading. Like Simon asked me how to really classify the structure. Well, you can actually, you see here, you draw a horizontal line here, draw this line here, and you define a structure. Why? Tell me why. Do you see the price come to test this level for 1, 2, 3? Right? What does this 3 test means? It tells me that now the 101.56 is acting as a what? Guys, these 3 candles tells you what? The 101.56 is as a, no, not a support. See here, comes up, rejected, yes. It's a resistance, right? 101.50. This one closed a little above here, right? And then this candle is very important. It totally breaks up, close above, close outside. So this one tells you that this structure is break. Is formed, right? It's formed the structure because the price is trying to, to test this level, failed once, failed twice, third time, okay, almost break through. Then this candle tells you, yeah, finally breaks out of this box. So immediately you can think, if there's a chance the price comes back, what you can do? Comes back into the same level, guys. Is there a good choice to buy at here? When the price comes back into the same level, you can buy it, right? And where is your stop loss? Very simple. below the, you can choose to below the box if the box is not too wide. You can also choose to put the stop loss below the recent rally, right? Then where is the origin of the recent rally? Yeah, definitely this bar. Because this bar is a green candle, tells you the price of rally from 101.41 to 101.58. So you can put your stop loss just below the candle, below this candle. And you will do, right? Oh, almost hit my stop loss, but didn't really break through this candle. So I have now have a money. Okay, whoa, have a lot of money. Okay, come to this structure, this previous high. What you can do, guys? This is origin of the downside movement, right? Look at this bar, very, very bearish. So when the price hits here, what you can do? You can take half profit or you can take all. It's okay because the price is still ranging, right? It's ranging. The whole this bar, this red candle defines a top and defines a low, and the price just moves inside of this bar. So we call this is actually an inside bar, right? You can take all, you can take half. Yeah, that depends on you. And now the price, you see here, rejected this high means sellers comes in, the buyers fail to break out, right? Sellers comes in, right? So you can take all, you can re-enter short if you want, okay? And then the price comes to this level again. See here. So guys, what's your decision now? At this point, after this candle, it comes back to the same structure again. What you can expect the price action to be? You can buy, yeah, for very aggressive you can buy because this is a very typical pattern, right? A pattern. Yeah, you can, yeah, we may buy again, but we can expect the previous structure still works, right? It has two possibilities. One is comes to this level, it bounce back, goes up again, or it will the next candle if it close below this low, which means this structure is violated, and then the previous downtrend will remains, right? The previous downtrend will continue. So you don't have any other opportunity to buy after this structure is violated. Okay, so you can consider to buy it again, or you can watch for price action first. Okay, then what does this candle tells you? Guys, did the price break down? So yeah, this possibility is low, right? Because if it will break down, it should break down the next candle. Means this move will continue. However, this green candle tells you, yeah, there are some buyers here, right? And then the price rallies. Now it's in the middle. Okay, so what does this price action tell you? Can we assume that DXY have a very good support at this structure, which means this structure is very important to DXY? Can we do this assumption? Do you agree? Because the price action tells us, yeah, the sellers failed to break through this level, right? So where is the DXY support? Yeah, 101.55 to 101.30. Okay, so just take note that this structure is support, right? And then where is the next rally to be? Well, it's still this level, right? And this level is tested. Okay, so right now the DXY is ranging. It's just ranging sideways, right? Neither breaks a new high nor breaks a new low, right? So what we can expect the price to be? Can the price stay in this level forever? My question, guys. Will the price stay in this range forever? Not really, right? Because the market should move, right? Yeah, we have all these catalysts to drive the force, right? All these, non-farm payroll, the US GDP, all the economic data, right? Yeah, the Euro GDP, Euro CPI, right? So all this economic data will be the catalyst to drive the force to breaks up or breaks down. So now we can just watch. We can just watch the DXY. So if the DXY comes down again, what you can do? if the price pulls back to here, to this level again, what you can do? Well, we can still take a long if it didn't breaks this down, breaks this new, breaks low, right? If the price fall close below of these two candles, which tells you it makes a lower low and it tentatively to to goes down, right? Then you don't want to buy. But if the price comes here again, okay, make an equal low, still have a support, still have the price action tell you, yeah, it's supported, you can buy. Do you want to buy it now, guys? Here, my question. Bernard, can you tell me, do you want to buy it now? This is a resistance, and this is support, right? Do you want to buy in the middle? No, right? Yeah. So either wait for the price to come down again, you have a good price to buy, and it tightens. Why you want to buy here? Because if you buy at 101.56, your stop loss will be very minimum, right? Your stop loss will be smaller. You will have like your stop loss maybe just here, and then your reward, 2 times of reward is possible, correct? If you buy here, stop loss below here, and your target here is the top. Is this target? Is this two times of the risk target achievable or not, guys? If the price comes back here, you buy, and this is your target. Tell me, is this target achievable or not? Or I give you a choice. If I set my target very high here, until here I have a 1 to 2 risk reward ratio, and my target is here. This target and this target, which one is easier to be hit? The lower one or the top or the higher one? James says lower one, right? Yeah, of course. Lower one just requires the price to be touched 102.20. It didn't really touch the previous high, right? So you can have I can have my target, which is 2 times risk reward, and this reward, yeah, is still below the high. It's very possible for the price to hit this target, and then here is a very good buying opportunity, right? Okay, you can also choose to do what, guys? The second option is you can wait for the price to come back to this resistance area, and you can short, right? So if you short here, where is your stop loss? If you short here, yeah, my stop loss should be just above this pin, right? Right? Am I right to say that? If you want to short based on the price action, this 3 pin bar tells you there are sellers, so the price should stop ready above the high, right? If I want to do a short, I don't want to see the price to break a higher high. Okay, then this is my stop, this is my entry. So my risk is here, and where's my reward? Yeah, my reward 2 times achievable or not? Yeah, definitely 3 times achievable, right? You can have your short target with just like 3 times of risk. Okay, so this is how you determine to trade the DXY. Either to wait till it comes back to a lower price you want to buy, and aim for a rally. A small rally will do, give you 1 to 2, or you can choose to wait for the price to come to 102.41. You short and aim to 101.90. You still have a risk reward 1 to 3. Okay. And what happened? What happened if either of the structure is violated? What you can do? Let's discuss it. If the top structure is, if this resistance structure is violated, what you can do? Very simple. You see a breakout, you see the pullback, you want to buy, right? Yeah, and where's your target? Yeah, look left. Okay, my target will be like here, right? This previous support now becomes resistance. Okay, this one will be my target. And what is your risk reward? Yeah, my risk reward is still good. Okay, still like 1 to 2.61, right? You can have a buy of the pullback, and if this lower support is violated, what you can do? You can consider to short the pullbacks, right? And where's your target? Yeah, look left. Just now I already mentioned. Yeah, here. Here will be the next target. If this one is still violated, you will go to 100. Here, this part, right? So now we have very clear map on the DXY. So understand, Simon? Now you understand how you make use of the structure? Do you? Okay, clear. Good. So, all right. So DXY sideways. Okay, may go high, may go low, may break down, may break up. So the trading opportunities. Okay, guys, concentrate on the potential trading opportunities rather than where it will go. Okay, so this is a message I want to tell you all. Okay, concentrate the trading opportunities rather than where the market will go. Okay. The meaning is very simple. Guys, tell me, do you know where the market will go? Will the market go up, or will the market go down, or will the market be sideways? Tell me, what is your answer? Can you be 100% sure that, yeah, I'm sure tomorrow it will go up, right? Nobody knows, right? Nobody knows. Yeah. So, okay, in my Chinese course, I told my students, okay, now I just want to translate into English and tell you that, okay, where the market goes, the answer is the market knows. Okay, where do I enter a trade? I know. Okay, so this is a message from Jack to all of you. Okay, remember this sentence and remember this. Just think of this logic. Does this logic make sense or not? I don't know where the market go. I don't know. I have no idea. All right. So the market knows it will go where. Only the market knows, and only when the market goes to up, we know that yeah, it goes up. Okay. But is this first message? Is this first question important? No. I don't care where the market goes, but I care where do I enter a trade. I know. How do I know? Yeah, based on structure, based on the price actions, based on what I can see from the market, right? So the strategy that I teach you guys is to give you an idea that how to enter a trade, how to make a trading plan, isn't it? All right, so focus. So my suggestion is to focus on the trading opportunities, which is number 2, rather than where the market will go. Don't guess. Don't guess the market will go up or go down. Doesn't matter. If it goes up, you just ask yourself, yeah, the price goes up very nicely. Did I have a buying opportunity here? If the market goes down, did I have a shorting opportunities? Or do I buy? Or did I buy already? Am I in profit? Right? Okay, so tell me about your feelings. Do you have this? Do you agree with me? A lot of traders just waste a lot of people waste 90% of their energy into the first part. You just waste 90% of the energy here. Okay, but I want you guys to spend your energy in here. Not here, not the first part. Okay, don't guess, because it is so chaos, right? So chaotic that you guess, yeah, 90% possibility goes up, 10% possibility goes down. If the US dollar data if the US data is good, it will have a possibility to goes up and then pulls back a little and then just read it again, and then maybe you go 104, right? It's endless, right? You will never know where. You don't want to spend all your energy to trying to make a pass for the market for the future, right? You don't want to do that. So just focus, makes your energy all in here. Is there any good opportunity to buy or sell or not? Right? If you know that, trade it. Okay? Take this sentence down. Yeah, it's so important. This and okay. And let me tell you what does the first sentence means. Okay, so this first people who solving the first problem is analyst. Okay, this is analyst. Analyst tells you, yeah, it will have a kind of a due to blah 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 blah, the dollar may goes up to where, the dollar may goes down to where. Okay, 90% possibly goes up or 50% possibly goes down, right? The analyst tells you, trying to predict the market where it goes. Analysts do. But people who focus on where do you enter a trade. Who are these people? Trader. I'm a trader. I only want to know when should I pull the trigger, right? I don't care. Now my target is a rabbit or a lion. I don't know. Beat lost your voice? Really? Guys, can you still hear me? Can you still hear me? Hello? Yeah. Okay, here. Now okay. All right, sorry. I think they just lost the connection. You can hear, right? Okay, good. Okay, let me continue. Okay, so the people who focus on where the market goes, trying to pretend that he knows, he controls market, or he know where the market goes. Okay, they are analysts. All right, people who know that where to enter trade, that is trader. And who you are, guys? Who you are? You are trader. You are your own trader, right? You don't want to listen to other analysts' suggestions and trade basis on other people's opinion, right? You don't want to do that. You are a trader, okay? So focus on put your 90%, put all your energy here. Where to enter a trade, okay? Because analyst works for the banks. Analyst works for the institutions, right? So when an analyst tells you that this stock is worth buying, or from the fundamental analysis, yeah, this company has very good, PE ratios, rate of return is good, right? All this kind of, fundamental supports the company to that you want to buy the stock. But is this analyst really working for you or working for the institutions? They work for the institutions. All their job is to create an idea or an opinion that for the other retail traders or the retail people, the novice traders, or for those investors to buy or to sell, to create volume, to create trading activities so that the institutions can earn the commissions, right? Who pays their salary to the analyst? You or the company? You or the banks? Yeah, the banks. right? And they tells you, yeah, the market may goes there or may goes there, but where is the trading opportunities? They don't tell you. So the only thing that you can rely on is yourself to know where to enter a trade, where to enter a high quality trade, right? And that is all I teach you guys, how to find the high quality trades. It must be high quality. It is not like, yeah, I know, yeah, I want to buy, I want to sell now. Is your entry price really good? Where is your stop? Where is your target? A lot of people just, they just want to buy or want to sell based on the current price. They never wait, right? They never have an expectation that where should they exit the trade. They don't know, so they lose money. Okay, so take this. This is the trading, so-called trading mindset that I want to share with you guys. Okay, you may have your own. All right, doesn't mean that I'm 100% right, but personally, I feel that if I am a trader, I will focus on here, not here. Okay, clear? Everybody knows. Take down my sentence. Okay, good. Hi, Qingchen. All right, good to see you. Oh, 23 people. Oh, Annie or Jerry, James. Oh, okay, good. Oh, hi, Ken. Ken is here. All right, really miss you guys. 217 is here, and let's do a very good job in 217. Okay. All right, let's talk about the gold first. Hi, yeah. How's Canada still cold? My God, I think is the connection still well? Okay, pretty cool. Yeah, same here. Okay, the gold. Let's talk about the daily chart. Okay, daily chart. Where is the major resistance is here? Okay, 1199 to 1202. The gold is kind of forming a V-shaped bottom, right? Kind of forming a V-shaped bottom. And the recent rally is still quite strong, okay, because it breaks the previous structure here. It breaks this structure. All right. After, okay, first test, second test, third test not successful, but this candle is very powerful for the gold, because if this candle breaks the structure, it actually tend to goes up to 1,200 level. Okay, so I'm not going to buy the gold right now because the price already rallies. I want to wait for the price to goes into 1,200 and find a short opportunities. Okay, because this is a very, very important structure here. Okay, breaks down, didn't really pulls back. Okay, so wait for here to short the gold. Of course, in 4-hour chart, what can we know is, all right, I do see ABCD patterns. All right, if I draw this A to B, and I just clone it, all right, it actually tells me, yeah, it's already completed the ABCD pattern. Okay, this ABCD pattern is completed, and my Fibonacci extension tells me that it possibly will hit 1188.27. Okay, and where is 1,200 level is here. Okay, so now I know that the gold will face a very good resistance into this storm, right? But check the trend right now. The trend is still up, right? And do we see a double top for the gold right now in 4-hour chart? Is there a double top? Have the price reversed? Not really, right? It's still in an uptrend. Still higher high, higher lows. And then you can draw a trend line here. right? The gold still have kind of support here, right? But what we can do is we can anticipate the uptrend will terminate it into this yellow zone, right? And once the gold forms a double top here, okay, most likely, what I think you forms a double top. Okay, if it forms double top inside this resistance area, you can consider to short the pullback. Okay, so wait for the price to form a double top, find a pullback or 2618 trade to short. Okay, and alternatively, you can find a good pattern to trade if the double top is made by a harmonic pattern. And this is the best harmonic pattern to trade the reverse, to trade the top, because after the harmonic pattern forms the D point, and if the price really comes down, make a lower low, breaks the neckline, then the double top form, right? Do you remember? In high location, we want to find a bearish pattern, and then why the second top is formed is because of these harmonic patterns. Okay, so that is the best part. Okay, but sometimes it may not form a harmonic pattern. The price will just comes down and goes back again. Like second rally didn't close above, then you can short. That's also good. Yeah, double top, the second top should be lower. Yes, you are right, Jonathan. So that's why we know that the gold didn't really have a double top yet. So wait for the price to form a double top into this big resistance area from 1188 to 1188.27 to 1002. Okay, wait for the price to go into that, find a pattern, find a double top, pull back to short, and then you can trade a trend continuation in a big picture, right? Because this is a very, very bearish trend. After the bearish trend, the gold pulls back, form a channel. It forms a channel, right? Okay, if this channel is violated, it have a continuation, and then the price may go down further to 1,100, and you will have a super returns of the short. Okay. Do you agree? Yeah. Okay, that's good. Okay, hold on. Okay, so this is gold. Okay, let's talk about the oil. Okay, all right. So this is okay. The last time we have a strategy. Okay, wait for the oil to pull back the structure. All right, and I see some of the students make use of the 618. Right, bull short the 618, 54.03. Raise your hand. Bull shot the 618. Oh, Boris did. All right, nice job. All right, this is a typical of profitable patterns, right? This is a ascending wedge, right? Ascending wedge breaks down. Okay, guys, the price pulls back, the correction moves to the 618, and you have a very good pullback short. And now it earns 200 pips. All right, that's perfect. Okay, so we can see that the oil already forms a top, right? It has a double top here. Okay, where is the neckline, guys? Where is the neckline? Here, right? This is the neckline. Okay, So since the oil already closed below the neckline, the pulls back, we want to short. We want to short, okay? But take note that you may find a better opportunity to short the oil at here, the previous low at 52.78, right? But the whole idea is to short the oil, short the rally, okay? Short the pullback, and then you can have another drop to be profitable, okay? All right? And then the next level is 50, okay, it's 50. If the 50 is a break, you will go to 45. Go to this place, okay? All right, and Simon says that there's a bad pattern. Let's look at it. All right, my first concern is, yeah, this is a bad pattern. It's a good bad pattern. It's a correct pattern. However, check the X point. Simon, tell me, from the location wise, right? Do you really think that the oil is at a high location or low location right now? Right now. Higher, right? So in my course, I say, if you want to short the high, buy the low, right? Buy low, sell high. How to sell high is trying to find some, bearish pattern to sell. Do you agree? Right? Don't buy these bullish bets when the price is not at a very low. Okay, a lot of harmonic traders, they want to kind of trade every harmonic patterns, right? They say, yeah, this is bad. I can say, yeah, there's another bad, maybe, maybe. Okay, right? Yeah, but the direction is wrong because the trend is going down. So trying to short the bearish pattern when the price goes a higher location, or you want to consider to buy a bullish pattern when the price goes down. Okay, so I won't suggest you to buy this bad pattern because it is not at a very low location. But you can anticipate that the price may have a bounce. It may have a bounce back, right? Or it may form a double bottom here. If you see this kind of a thing, then you know that, yeah, this structure is very good. You want to buy the pullback. You want to buy here, or you want to buy the break of the neckline. You want to buy here. Okay. So that if you really want to buy, you better wait for the price to, second test, didn't break the new low. Here is opportunities, and here is another opportunities. These two, okay, but not here, not here, because the price may just goes below the structure. Okay, understand? How about others? Do you understand? You see your harmonic patterns, and whether if you know that the location is not very good, okay, you can anticipate a rally, right? But you don't really want to trade this bullish pattern because it have a possibility to just break the low because the downtrend is already formed. Okay, good. So this week we still want to short the oil, okay? Euro. I just published an idea in TradingView. I say euro dollar 1.020612 is very important because this structure is very, 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 very strong. Okay, so as long as the euro is below this structure, we can short. Okay, find a small time frame to short. Okay, here, what do we have? We have a 2618 trade. Then we have a 2618 trade because price goes up, goes down, up again, and goes down again. So this is a double top, and you want to find the place to short. Okay, so yeah, you can short when the price goes into this 618 level or the previous, the neckline level. Okay, short the euro, short the pullback. Okay, this is how I see the euro. Okay, short here, first target, second target will be the previous low here. This pin. Okay. All right. Sterling. Sterling now is kind of in a very low location. As I mentioned, the sterling may test the previous low, and now it really did. So the only the only major pair that I want to buy is sterling. Will be the sterling. Jonathan's asked potential ABCD pattern, right? Let me check. Potential ABCD pattern. You mean where? Where is the potential ABCD pattern? You mean if you want to short, you want to use ABCD to take profit? 1.0520. Yeah, potential. You can use this ABCD pattern to determine your target. That's very good. Yeah, that's a good idea. To use the ABCD pattern to take your profit of your short. That's good. Yeah, you can do that. Very clever. Okay, for the sterling, test 1.21 level. So 1.21 level is very important structure. We can see a lot of price test this level before. It really didn't break low. Okay, so don't short sterling at this level. If you want to short, wait for the pullback. Okay, wait for the pullback at least to 1.224. Okay, at least 1.24 to the previous high. So right now the sterling will be in the range. Okay, sideways maybe. Okay, if you want to long, if you want to buy, better wait for the consolidation to be finished. Better wait for the consolidation to be finished. Okay, if you want to buy the breakout and retest. Okay, that will be this one will be a good idea. Okay, so wait for the breakout, pull back, and buy. Cipher, right? Yeah, it has a cipher, and the cipher already completed, right? I know this is cipher pattern, right? Some people say this there's cipher pattern here, okay? But I don't think the C point is good because it really didn't fulfill the requirements of this. Didn't really touch that, right? Yeah, but I don't suggest to buy the cipher pattern because this is a daily chart. Okay, a daily chart you want to buy only when in a smaller time frame you have a better idea to buy. Okay, so zoom into the smaller time frame. If you want to buy, you want to find a good place to buy. You want to see the price action to to break out to change the trend from the bearish trend to an uptrend, right? Because you know that, yeah, here will be the cipher's D point. Okay, I know that, yeah. So if you have a view that you want to buy the cipher pattern, here it is. Okay, you know that this level is a potential reversal zone in the big picture. So it goes into a smaller picture to further confirm that, yeah, the price action really, you can see the bias, okay, and forms an uptrend in the smaller time frame, and you buy. Okay, that is my suggestion. Okay, Aussie dollar have a strong rally recently. Okay, and however it really touched the testing this level. Okay, and this level, I can see that the price stopped to break higher, and it already touched the 618 from the recent drop. It really touched the 618, which is 0.7385. So I want to short the Aussie. Yeah, I want to short the Aussie because big picture tells me that the potential move of the Aussie will be, breaks down, pulls back, breaks down again, pulls back, and it will have another move potentially. So I want to short the pullback. I want to short the rally. Okay, and the 618 level is very important. It's good for a reference to short. Okay. Right, and just hit, and the price action is good, so you can short the Aussie. Okay. Dollar yen. All right, dollar yen. The very important weekly structure is at 118. The 118 here. This part. Okay, it really didn't breaks up, but I don't want to short the dollar yen. I want to short the sterling yen. Last time, right? We short sterling yen from 146. And this sterling yen short, I already hit our target. We really hit our target. Did you close your sterling yen, guys? This trade, long time ago, almost 2 weeks. Yeah, in December, almost 1 month. Yeah, I think you can, because target is already hit, right? It hit. You can still keep some, right, and take your profit at 139, maybe. Okay, but don't buy it because still a bearish trend. Okay, so for the dollar yen, my opinion is sideways. Okay, right now the dollar yen is sideways. High is here, low is here. Okay, similar to DXY. Okay, so you can trade the sideways, buy the low, sell the high. All right, but don't expect it goes too low because the fundamental really, the yen is weak. Okay. Dollar Canada. In dollar CAD, right? This job is very strong, okay, but it's still in the uptrend level. So the dollar CAD is really very hard to trade, because it's not a very clear move. Right? It goes up, breaks out the structure, and can pull back so deep. Breaks out up again, pulls back so deep. So I don't want to trade the dollar CAD right now. I don't want to trade it. Okay, because it's the range. Although it's uptrend, but it's like sideways, right? Goes up and can retrace so much, right? So it's not a very good choice to trade this pair. You can just consider to trade the oil only. Don't trade the dollar CAD. Right? However, if the price really goes into this structure, you can buy. You can buy from the from the trend line support or from the horizontal support here, about 1.3150. Okay, you can buy here. A stop loss below 1.3079. Okay, you may have a buying opportunities here. Okay, and aim for 1.33 or 1.36. Okay, that is a potential buy. All right, lastly, S&P. Okay, S&P are trying to make a higher high after the non-farm payroll. However, it fails, right? It failed. And right now the S&P forms a top formation. So the structure is here. The structure is here. Okay. So if the price ever pulls back to 2275.4, you can short. You can short. Okay. Thank you, Jonathan. Yep. 5 minutes charts, right? Let's check the 5 minutes charts. Okay. 5 minutes charts. Yeah. Kind of, potential right shoulder, right? And where is 618? Okay, yeah, just touch. Well, I may consider to short the Aussie about yeah, here. I think it should be here, 73, 72. Okay, because here will be a liberal pattern. Because look left here. This is a good reference point. Okay. Yeah, you can short because this is a 5 minute chart. You can short the whole zone. That's okay. That's okay. But I think the best opportunities will be here, 73, 72. Okay, a liberal pattern. Okay. Well, yeah. Also a cipher pattern. There's a cipher pattern here. Yeah. So you can trade the cipher pattern, the same level. Okay, so basically we have covered everything. All right, and I think that's all for this week. So really remember my message, right? Focus on how to find the trade. Okay, make a high quality trade based on your knowledge, based on your experience, based on the patterns, based on all the things that I teach you guys. All right, trade with a reason, trade with your plan. All right, okay, that's all for today. Yeah, I'm going back on this Saturday, so and spend. I will stay for the across Chinese New Year in Singapore. So let's find some opportunities to gather again. All right. Yeah, welcome guys. So yeah, just continue to still trade, discuss in our trading group. Okay, and let's find some good opportunities together. All right. See you. Bye bye.